Good day, Traders Mindset Reset. It's Thursday, Free Cash Thursday, day 2 on the backside of the week. Today we had some very large moves on the indexes. We had moves on the metals. We had opportunities on different currency pairs. It's day 2 on the backside of the week. The backside, we talk about this almost every single week. There are going to be session opportunities in the range expansion. There's going to be range expansions on the backside, range reversals on the backside. We went through that in the last technical video. And every single week, one of the things I emphasize to traders is patience and discipline are your allies. Impulse and FAFO are your enemies. Now today we're talking about the dote. There's the goat and the dote. Now I call myself the dote because in my past trading experience, I've been the dumbest of all time. I've talked about doing every single thing possible that you can do wrong in trading and repeating those bad habits again and again and again. I would do several things right. I would build up small accounts, and then I would engage in impulsive, random, self-sabotaging behavior that would destroy all the good results that I would build up and do it 10 times as fast. Now, one of the things that's great about these markets and the opportunities that we have is that if you understand the setups and the days where it's really easy to make money on, days that you have 90-10 edge, not catching a high or catching a low or catching a move, where is the scalable opportunity? And if you don't know what those are, go back through all the videos, back through the playbook notes, go back through all of the additional examples that have been added into the courses, both the ACB and the playbook. There are multiple examples on the channel. There are days and setups where it's really easy to make money on, and then there are days and setups where it's really easy to make a lot of money on, where the templates are the same. Could be a different instrument, it could be the same instruments. We can see that on indexes, we can see that on metals, we can see it on energies, and we can see it on currencies, week after week after week. There is nothing new under the sun. The biggest variable to any trader, any discretionary trader, achieving 100-fold time their current level of success is the trader themselves. It's when you try to trade markets. So this is the one point about today, about what I've learned from being the dote, is that if you're trying to trade markets and take trades, there's two types of traders that try to take trades. The ones who want to be as smart as they can and trade every single move because they're great traders. And there are people that can do that. And there are traders that keep trying to do that and they keep destroying their trading accounts. And so my point with the dote, the previous dote myself, is I said, hey, Mr. Stupid, like Paul Tudor Jones. I read Mr. Jones' comment. He said to himself after nearly destroying his entire trading account, he said, hey, Mr. Stupid, why not make trading a pursuit of pleasure? And that to me resonates with, why don't you trade the days and the setups where it's really easy to make a lot of money on? And I transfer that to a weekly template and say, trade the sessions. So if you're trading, I talk about maybe a front side or a backside move on one of the metals in Asia for easy parabolic explosive move, an easy parabolic front side or backside, a range expansion on the front side maybe. It could be a reversal template because we could be at the highs of the month on a day 2, or we may have high impact major red news on a day 2 and day 3 reverses the range. Two types of trades on a day 3, a trend trade or a reversal trade. So forget about trying to predict markets. I said, hey, Mr. Stupid, I'm not doing great at predicting markets, and I had years. I have a diploma in technical analysis. I have studied classical hand charting for over 20 years. But I'm looking at where are the setups and the days where it's really easy to make money on. Now, here's the next big challenge that the dote had to go through. The dote had to break a lot of recurring bad behavior issues. Doing everything right, and then impulsive random trading on low probability days and low probability market conditions. Now here's the thing, what's really easy to do is to keep doing the same things and expecting different results. But the hard thing to do is actually stop doing stupid things. Stop doing stupid things. Replace them with good things, even if it's away from the screen. My friend Steven gets up, goes down to the beach every morning, rucksacks 40 miles down the beach with a 2-ton rock on his back, and doesn't want to get to the screen till 22, maybe quarter to 10 in the morning. Do you think he cares about missing out on a move? Missing a move? That's not his setup. That's not his strategy. There are days when it moves at 9:45 or 9:40 in the morning, and he may be on that because the market's already set up for a reversal trade setup opportunity, which is part of his criteria. But he knows he needs to stay away from the screen. Now, I did a lot of things repeatedly that were damaging by being at the screen. And then, of course, you go back and we talk about this every single week. You get the front side, people are chasing every single move and catching this and catching that. I caught that, I caught this, I caught that. But I'm talking about, think of yourself as you're managing a fund of capital. You're managing a fund. What are your strategies that make your fund the money? Repeatedly, rinse and repeat. Is it predicting? Is it analyzing? Or are there setups and days and markets that repeat behaviors where it's easy for explosive money-making opportunities? And in between, doing nothing, sitting with your cash in the account, waiting, like Richard Dennis says, not losing capital or risking capital on suboptimal trades. There are instances and times in the market where there are going to be explosive opportunities where you can make a lot of money, really, really fast. Leave all the analysis, all the information about blocks and gaps and sweeps and hunts, commitments of traders reports, supply, demand levels, all these other things to the experts. Leave it to the experts. Mark Douglas says this: you can know nothing at all about trading and still make money. Now, there's a caveat that comes with that, and he says you can know nothing at all, but if you want to make money consistently, you need to understand what is your edge, and then only acting when your edge presents. That's the key message today. The hardest part for most traders is doing nothing at all, staying away from the screen, not thinking they're missing out. Oh, I missed that move. It happened in the gap time. If it happens in the gap time, that's not your trade. You didn't miss anything. If the market moved in the gap time and you trade in London or you trade in New York or whatever else, that's crazy. It went in the gap. I missed it. You didn't miss anything. Nothing gets missed. That's in your head. You don't miss anything. Where's the setup in my timing window that rinses and repeats? Which instrument is set up? Maybe I don't have a setup today. Well, here's a challenge. Do nothing. Don't risk your capital on suboptimal trades. Don't be at the screen risking being impulsive, impatient, and FAFO. If you're not sure what FAFO is, Google it. Every time I say FAFO, somebody asks, what's FAFO? The thing is, you make a lot of money on the setups and the days where it's really easy to make money on. 2 trades this week. 2 really easy trades. There was at least 2 in Asia this week for traders. There was at least 2 in London this week for traders. There was at least 2 in the New York session for traders this week. That's 6 opportunities in different sessions. So two in different sessions, and only 2 trades. If you only took 2 high probability trades, regardless if it was currency, energies, metals, or indexes, that would have significantly compounded your account. They were scalable. When I say scalable, it means all time frames are behind the move, whether it's a reversal or a trend trade. Okay, and it's not about reading the markets. There's plenty of examples on the community page. There's plenty of examples in all the videos. There's PDFs in the extra PDFs in the course, and there's extra PDFs in the ACBs. Now, here's the thing about ACBs. There are going to be days that set up as an ACB candidate. Now, remember what I said in the basic model for the ACB template. It's a 3-session setup, but it still brings a pair up on your watch list, and several pairs today gave traders ACB opportunities on the backside of the week in Asia and in London and in the New York window. So the low-hanging fruit, if it's already left the station on an ACB day, I'll say this in closing, an ACB day, means that if you have the opportunity in the US window for low-hanging fruit, that's entirely up to you if it's part of your repertoire, depending on which instruments you're trading. But if it presents, if that opportunity presents, you should have full confidence understanding when it's an ACB day. An ACB day means once it's broken out, it's not coming back, because here's the kicker. On an ACB day, if it's a failed breakout reversal or a trend trade, that means there are people caught on the wrong side of the market and they're not going back, because it allows those traders out of the market without bending their arm back so far enough that it either blows out their account, it margins them out, or they just close it out with a massive loss if they're caught on the wrong side and they haven't used a stop. And you'll also understand this, when they explode out like that, I want you to think about this. When they explode out like that, if traders have stops at the extremes on the wrong side of the market, I guarantee you, part of that explosiveness, it locks in slippage against their accounts, and there's nothing the trader can do about it. So you have a $100 stop, a $10 stop loss, a $500 stop loss. It'll probably take another 25% damage, 10% to 25% damage, because they'll spike it through explosively, and that'll be called slippage. So that's another way that the smart money, the liquidity providers, or whoever, okay, the boogeyman, the algorithm, can get more money. When it explodes like that on certain setups, it guarantees them slippage, which means that your loss is bigger than what you expected, and traders will average in often. Those markets are on range expansions before reversing or expanding the range. So the most important thing that I learned from being the dote is to stop doing stupid things and trying to trade every day, trade every little move, and understand that you make a lot of money on the setups and the days where it's really easy to make a lot of money on. And then in between, making sure that if you are trading, that you're not engaging in impulsive, random, self-sabotaging, no edge, low probability market conditions that can potentially put you on tilt, or cause you, the trader, the biggest variable to any trader's success, looking at them in the mirror, to come unstuck and do a lot of damage, which over time, if you keep doing that, will build up, and we'll call that scar tissue, because you either learn from it and then you earn from it, or you learn from it and you never recover from it. So finish the week strong, traders. Today was Free Cash Thursday on several markets. Congratulations. We've had, here's the thing. Going forward, do you think anything's going to change? Do you think anything's going to change? Nothing will change. The markets are constant. The markets are constant. The trader is the only thing that needs to change, and it is the biggest variable to your success at trading. Beautiful sunny day. Great workout today. Nice swim. Keep things simple, traders. Rinse and repeat. Don't do anything in between to damage those good results. Love you and appreciate you. Have a great day, and may the markets go with you.